Planet Vero Studios, brought to you by Evergreen Media, creating cohesive marketing campaigns. Evergreen Media in Vero Beach.
She is a beauty influencer from New York City who commands attention.
He is a lawyer born and raised in Florida who lays down the law.
And together they are The Lady and the Law. Here are your hosts of The Lady and the Law, Cindy Grossman and Mitchell Goldman.
And hello to you, Cindy. How are you doing today?
Doing well, thank you, Mitt.
Excellent. You command my attention, that's for sure.
Thank you.
And we have a guest with us in studio and on remote. Our guest today is Sam. He's showing Jesse what to do, and we're very happy to have him. Say hello, Sam.
Hello.
You can wave.
Hello, how you doing?
Okay, there we go. So there's Sam. He's helping Jesse, or vice versa. I'm not sure. But our guest today is none other than one of my partners, one of my law partners, Matt Monahan. And I was just reviewing our website, Matt, and I did not realize you and I have an anniversary. Maybe we've talked about this. You know how long we've been practicing together? You want to guess?
25 years.
25 years.
Wow.
It's like an anniversary.
Silver, isn't that silver? Silver anniversary.
I think so.
Yeah.
I know I had a lot more hair. Maybe not.
Does that mean you're going to buy me a silver Rolex? All right.
I think it works both ways. But anyway, Matt has a very unique skill set. Not only is he a lawyer, as you would say, but Matt is also a CPA, licensed in Florida, and he brings that pretty unique combination to the table when it comes to legal issues. Now, Matt, one of our listeners asked that we discuss life insurance. And it's not just life insurance, but the different kinds of life insurance and how they relate to individuals and businesses. But I know when we talk about life insurance, it seems the first question we always get asked is, what's the difference between term life insurance and whole life insurance? And whole life insurance, I also include sub-variants like universal life, variable life, etc. But I'm going to all lump it into a whole life. So Matt, what's the difference between the two policies, the two kinds of policies?
Yes, there's a lot of differences. I'll start with the primary difference, and that is that whole life insurance is based on your entire lifetime. And term insurance is just based on a term of years. So what that means is whole life insurance pays when you die, no matter when that is. And so if you live to be 100, whole life will pay out when you turn 100. It's effective for your entire life. Term insurance only pays if you die before the expiration of a term of years. So if you have a 20-year term policy, if you die before the expiration of the 20 years, the premium benefit will be paid out to your beneficiaries. If you live longer than the term of years, if you live 21 years, the policy is void and it expires. That's the biggest difference. Now, the second difference is whole life is much, much more expensive than term policy. Because a term policy is only for a term of years, the cost of that policy is only a fraction of the amount paid for a whole life policy. The third difference is a whole life policy accumulates value during your lifetime like a savings account. And so a whole life policy eventually becomes an asset. And like any other asset, you can actually borrow against it and pledge it as collateral security for certain types of loans. And you can also cash in your whole life policy at any point during your life, according to the terms of the contract, for what's called the cash surrender value. That may, in most cases, be less than the policy face value, but there is an amount there that you can demand from the insurance company, and they'll give you a check. In general, with a term policy, there is no cash surrender value. It doesn't accumulate value during your lifetime. and you can't borrow against it or pledge it as collateral.
And I know you mentioned the cost. The cost of a whole life policy is typically about, I saw some estimates of between 5 to 15% higher than just a straight term policy. So the cost adds up. And, as part of estate planning, I guess you talk to clients about which type of policy is of greater benefit to that person and that person's family.
One of the benefits of a term policy is its low cost. And I think a term policy is very appropriate when you have minor children, okay? Because maybe you have a non-working spouse and you have minor children and you have one spouse, which is the primary provider. If that spouse should die, how is the remaining spouse going to continue to support the children upon their, the parents' preferred lifestyle until they become adults? Well, in this case, a term policy would be a perfect solution. You get a term policy, maybe for 20 years, which would last until the kids get through college. God forbid something happens to the primary caregiver, the remaining parent will have these life insurance proceeds to continue to survive and raise the kids.
Well, let's talk about that. That's a great background and explanation about the difference between term and whole life insurance. Matt, in what situations do you see life insurance playing a role in the business setting for corporations, LLCs?
Yep. In the business setting, I see life insurance used frequently in two scenarios. One scenario, which is like a key man policy, is where you have one principal person who is the brains and brawn behind a business. And if that person should die, the business is going to take a tremendous downturn until it maybe finds a new principal, who can pick up the reins, a new executive. And that period takes time. And the key man policy can pay into the corporation and allow the corporation to have funds necessary to get through that, through that breakage in the lineage of management. And the second kind of policy I see a lot of is policies which are taken out by the owners of the business, either the partners in a partnership or the members of a limited liability company or the shareholders of a corporation. And these policies are taken out on the lives of each of the owners. And in the event that one of the owners passes, that policy proceeds can be used to buy out the ownership from the family of the deceased owner. And that way the family gets bought out. They get a check equal to the value of the business, and the corporation buys the shares back and doesn't have to deal with the family of the deceased owner.
And both of those are very important because, if you have a limited amount of shareholders, everybody hopefully gets along. Well, when one of the shareholders dies, if there's a spouse or children that get involved, sometimes it upsets that chemistry. So this is a mechanism to avoid that possibility. And it's fair to all shareholders because it applies equally to everyone. Matt, is there a special kind of insurance? Are these programs funded with whole life insurance, or are they funded with term insurance, or is there a special kind of insurance?
I normally see it funded with term insurance, okay? But because whole life becomes so expensive, for them to acquire. But you can also do it with whole life. I think the time to get these policies in place for a business or for yourself is when you're young, because the cost of this insurance increases exponentially as you get older. And by the time you get to be 50 years of age, even a term policy, the costs become exorbitant.
Now, Matt, there's one other kind of insurance that I see some companies provide is a group life insurance policy. Are you familiar with those? Can you talk to us briefly about how that works?
A little bit. That is a benefit that can be provided to employees, and basically the company can buy policies for a group of people and all the lives and employees are pooled together in one underwriting process, and that allows the life insurance company to perhaps provide the insurance rates at a lower amount than would have been done if each person had gotten insurance separately.
So that's usually like a modest amount, maybe $50,000, $75,000. But I guess if you leave the company, then you're no longer eligible for that benefit.
It's usually based on like 1 year's salary. You're correct.
Right. Okay. Thank you. Matt, when we come back, I want to talk more about life insurance and individuals and how it works for them and their families. So we'll be right back.
Okay.
The law offices of Goldman, Monahan, Tucker, and Mateen is here to help you with your personal legal challenges, business needs, and real estate matters. Since 1984, we have assisted countless numbers of Florida individuals and businesses with their legal issues, from trusts and estates, wills, real estate, and civil or criminal litigation. We pride ourselves on maintaining lifelong client relationships and would appreciate the opportunity to assist you and your family as well. Please call 321-639-1320 for further information on the law offices of Goldman, Monahan, Tucker, and Mateen. I'm a non-attorney spokesman.
It's time to call Easy Brew Coffee and Bottled Water Service and learn just how much you can save and how convenient it is to have your coffee and bottled water delivered right to your home or office. In addition to water coolers, Easy Brew offers individual bottles of water in 8 or 16-ounce bottles. No more lugging it home or dragging it into the office. Serving the Treasure Coast for over 2 decades, 2 letters, 1 simple name. Easy for Easy Brew. Visit e-zbrew.com or call 800-792-3285. Easy Brew.
Revive Vero Beach, located next to Anytime Fitness on Oslo Road and 27th Avenue, has everything you need to look and feel your best, including hormone replacement therapy, stem cell therapy, sexual wellness, weight loss, laser aesthetics, hair, tattoo, and skin spot removal, Botox and fillers, cryotherapy, comprehensive blood work, and everybody's favorite ozone and IV therapy. Refresh, renew, and revitalize yourself at Revive today. Call 772-492-6607. A member of the ITEX trading community. Your ITEX dollars are welcome.
ITEX, or International Trade Exchange, is the largest barter company in the world, with over 25,000 members offering goods and services. We're a marketing company that brings you new business in the way of trade, with over 200 local members enjoying the benefits of ITEX, like lawyers, doctors, plumbers, media, printing, and more.
Hi, this is Liz Bowler. Contact me and find out why barter through ITEX has been smarter for over 30 years. 772-532-1881. Visit itex.com.
Need an enlightening pick-me-up? Visit Kristen and Cindy at Skinergy to energize your skin and keep it looking fabulous forever. Kristen can help with hair removal, sugaring to keep your whole body smooth and conditioned. Kristen will help you refresh and defend your skin while giving you a customized facial. Cindy helps skinergize and get you camera ready for your everyday look or special occasion. Visit Kristen and Cindy at Skinergy. Find them on Facebook under the Skinergy Squad.
And we're back with Matt Monahan, my law partner. We figured out 25 years, so silver jubilee. Matt, we spoke about insurance and how it relates to businesses, but let's talk now, for the time that we have left, about how life insurance and other kinds of insurance relate to individuals and their families. So, one of the things I know is asset protection and estate planning. So can you talk about those issues and help work us through those issues?
Yes, one of the key benefits in Florida for life insurance is that in Florida, life insurance proceeds are exempt from creditors, and the life insurance policy itself is exempt from creditors. There's a law that states that these claims cannot be brought against the life insurance proceeds. And so they're completely exempt from any kind of attack from creditors. And that's a big, important benefit for life insurance in Florida. A second benefit is that life insurance avoids probate completely if you name beneficiaries under the policy. The policy will pay directly to the beneficiary named without going to probate, without having to go through a trust, It will skip the will. It skips everything. It just pays directly to the beneficiary. It's always advisable, because of that, to have a contingent beneficiary named in addition to the primary beneficiary. That way, if the primary beneficiary fails to survive you for some reason, those policy proceeds would just end up back in your probate estate if you don't have a contingent beneficiary named on the policy. So a good example would be you have a husband and a wife. Typically, the husband has a life insurance policy. He has his wife named as his primary beneficiary under the policy, but that same couple would want to name perhaps the kids or other family members as a contingent beneficiary, just in the small circumstance that the husband fails to survive the wife and the wife fails to survive the husband.
Thanks, Matt. Matt, can you also talk a little bit about another, again, it's a little different, but an annuity and how that works and how that applies to estate planning and asset protection?
Annuities are similar to life insurance, and they have, in some cases, even more benefits. The first benefit of an annuity is that, like life insurance, it is exempt from creditor claims. The annuity contract itself and the proceeds paid to the annuity beneficiary are all both exempt. They're even exempt after death. The second thing is that if you get an annuity and it's a non-qualified annuity, you put dollars in investments into the annuity, and then those dollars and investments inside the annuity grow without tax. They grow tax deferred, and they're not taxed until the annuity pays out later in your retirement. So it almost acts exactly the same as like a Roth IRA, to where it's after-tax dollars going into the annuity, but the money is growing without immediate taxation.
So that's certainly a good thing. And I know there are a lot of different kinds of annuities. And I guess if you're considering an annuity or you're considering a life insurance policy, it really pays to shop around, because from my experience and the experience of my clients, I know the costs vary widely. Big difference in costs and coverage. It's not easy to compare. It's not apples to apples. Sometimes clients ask us, well, what about this policy or this policy? And it's very hard to compare them, to know this policy has something different, guaranteed return of premium. I mean, they're different things, and it's very difficult. It takes a person that knows what they're doing to really help the client in this case.
Right. I have a quick question. If an older person comes to you, let's say, I don't know, 60 years old, and they want to do their estate planning, and they say they do want to get life insurance at that point of their life because they really feel like they do want to leave a little extra something to their grandchildren, do you suggest that, or do you, how do you answer that?
This is kind of sad and morbid, but more than likely, if they're elderly, they're not going to be insurable.
Oh, okay.
You can't get a life insurance policy when you're 99 years old. That is, the underwriters won't write the policy. Right. It pretty much starts deaccelerating pretty quickly after you turn 50, honestly.
Leave them, take some money and put it aside and trust for them, maybe an account. So when you pass away, the money's there for that grandchild. There's some other kinds of...
you can still buy an annuity at an elderly age.
Right, which is tax deferred, right.
Yes.
There's some other kinds of life insurance. There are other kinds of life insurance products, and I just wanted to touch on those. Some of them relate more to real estate. Sometimes people, they'll take a mortgage out and they'll buy mortgage insurance. Mm-hmm. So if someone dies and there's a balance on the mortgage, it pays the mortgage off. That has a benefit. That kind of insurance can be very expensive, And it might be cheaper just to try to buy a term policy for the period of the mortgage, or at least a portion of the mortgage that you can. It would be less expensive. There's also something similar called a credit life insurance policy. If you take out an unsecured loan, maybe for a car or whatever other purpose, there's life insurance for that. Again, those premiums can be very expensive, and there might be less expensive life insurance like a term policy available. We also see commercials on TV for a burial policy. Usually those are limited benefits, maybe $15,000, $20,000. Cost of dying is expensive, but it does cover final expenses, and there's typically not a health insurance requirement that you go through an exam. So if that's the only way to get insurance and you're concerned about those final expenses, then that's another alternative. I guess lastly, in kind of a perverse way, life insurance is a bet, and it's the only bet I know that I really want to lose. I don't want to have that bet pay off soon, because that means I won't be here.
Right.
So it's not like betting on your favorite baseball team and okay, you're going to win or you're not, but your life insurance, you want to lose, or at least not winning anytime soon. So Matt, any final thoughts? How do people get in touch with you?
They can call my office at 321-639-1320, extension 110, and set up a free consultation for estate planning.
Thank you, Matt. And, the kind of insurance that you need, the amounts that you need, it really depends on you, your financial resources, what your immediate needs are, what your family needs are. That it all factors in. Whole life, term, all those are decisions that have to be discussed and pondered, and there's really a lot to it. And somebody like Matt can help you make the right decision. And it's a financial issue as well. All that has to be considered. So, absolutely. Matt, thank you. I hope our listener got the answers that she was looking for. And I'll see you soon. Another 25 years.
Thank you.
Thank you.
Thank you. Bye-bye.
Bye.